Ethereum, one of the leading cryptocurrencies, has experienced a notable decline in recent days, dropping by approximately 18% from its previous high. Despite this, there are signs that Ethereum might find support at its current price level. The current price is sitting around previous resistance areas, which could now act as a new support zone. This shift from resistance to support is a common occurrence in technical analysis and could indicate a potential bounce for Ethereum's price. A significant trading indicator to watch closely is the 50-day moving average, often represented as the red line on price charts. Historically, the 50-day moving average serves as a dynamic support or resistance level, depending on the market's trend. If Ethereum's price respects this line, it could further validate the idea of a rebound. The market's reaction to this indicator in the coming days will be critical for traders and investors alike. Another crucial development on the horizon is the potential crossover between the 100-day moving average, blue line, and the 200-day moving average, orange line. This type of crossover, often referred to as a golden cross, is a bullish signal in technical analysis. Ideally, the 100-day moving average should cross above the 200-day moving average to confirm a strong upward trend. Although this crossover hasn't occurred yet, its proximity suggests that a major move could be brewing. If and when this happens, it could bolster investor confidence, potentially encouraging more buying activity in the market. Such an event often marks a turning point for assets, signaling the transition from a bearish to a bullish phase. For those considering investing in Ethereum, patience is key. The safest approach is to wait for confirmation of a bounce. This confirmation could come in the form of the current candle closing higher than the previous one, which would indicate that the newly established support level is holding. Additionally, traders often rely on tools like the Fibonacci retracement to identify optimal entry points. Based on recent analysis, Ethereum's price is currently beyond the identified buying zone. This suggests that waiting for the price to retrace and close within the buying levels would be a more prudent strategy. It is essential to approach the market with caution. Technical analysis, while valuable, is not a foolproof method for predicting price movements. The market often behaves unpredictably, and it's crucial to prepare for scenarios where the price moves against your expectations. Setting a stop loss is a critical risk management strategy that protects your capital in case the market turns unfavorable. Additionally, always invest an amount you can afford to lose, as the cryptocurrency market remains highly volatile. Another factor to keep an eye on is Ethereum's broader adoption and developments in its ecosystem. Innovations such as Ethereum 2.0 and its transition to a proof-of-stake consensus mechanism have made the cryptocurrency more sustainable and appealing to institutional investors. These advancements could play a role in supporting long-term price growth and increasing demand. In conclusion, Ethereum's recent price action presents both challenges and opportunities for traders and investors. With the potential support level at its current price, the influence of the 50-day moving average, and the upcoming golden cross, the market is at a pivotal point. However, prudent risk management and careful analysis remain essential for anyone looking to navigate these market conditions. For more insights, be sure to visit our website, subscribe to our newsletter, and grab our free trading ebook. Stay informed and equipped with the tools to make smarter trading decisions. Until next time, trade safely and have a great day.